The CEO of an organisation called AMEC, which is the Afro-Middle East Centre. The gentleman's name in the Joburg studio is Samir Brikho, the Chief Executive of AMEC. Samir, thanks very much for joining us on Power Lunch today. It's an interesting situation between the two regions, between, for example, South Africa and the Middle East. We are both, of course, resource rich, but there's very different approaches to the extraction of resources. Oil and gas and clean energy, of course, are very much in focus in the Middle East. In South Africa, it's bulk commodities and precious metals. The organisation that you represent, do you learn from each other, the two regions that is?
Well, thank you very much, Lindsay, having me on the program. First, AMEC actually, it doesn't stand for Africa and Middle East, but we do a lot of work both in Africa and Middle East. The markets which we are working on is the oil and gas industry, the mining industry, clean power technologies, environment and infrastructure. There's a question about what is the learning here between Middle East and Africa. On the energy side, definitely quite a lot of changes are taking place. If we think about oil, our view that the oil prices in 2013 and maybe even 2014 will be actually going down. The reasons for that, because we see, for instance, the growth in the OECD countries and the growth in China is not there as it used to be. We see also that a lot of projects are coming actually online, which is putting a lot of pressure on the systems. Historical trends shows that it will be going down. And more important is gas discoveries in the US with the shale gas exploration and also with the oil exploration in the US is definitely going to change the dynamics of the energy situation. The learning which we are taking now from the Middle East also is that many of the jobs, if you are doing, for instance, a mining job, it needs to be connected with infrastructure and it needs to be connected with energy. And that's what we're seeing also here in Africa. So energy and commodities when it comes to mining and infrastructure are coming closer to each other than ever before.
Samir, what about the situation when it comes to the supply-demand balance, for example, in the oil market? I noticed data coming out this week shows that oil supplies are at a 7-month high, and that's one of the reasons why the oil price, the Brent crude oil price, has come down from close to $119 a barrel to its current level of $113.25. Is that all to do with release of stocks in the United States and technicalities, or is it also to do with regions like Africa actually sort of starting to fulfill their potential? I mean, we used to think of just Nigeria and then Angola, but we've also got Sudan and other countries as well coming to the fore.
Well, you're completely right, Lindsay. I mean, there are a lot of things that are taking place here in Africa, and what I call it is very interesting news for Africa indeed. If we see the explorations taking place in Angola, in Ghana, and also now coming up in Eastern Africa, this would represent a very solid base to the supply of this world. Just to give you a feeling about what we are talking about, the US, they have their own exploration on oil, and they also do import about 7 million barrels a day, of which about 3 million barrels a day comes from Canada, 1 million comes from Venezuela, but 3 million barrels a day comes actually out of Africa. And that has been in the last decade quite a good story for many of the countries, not only for Nigeria but also for the other countries, and this should represent with it also a good opportunities for Africa to be able to continue the GDP growth, continue the investment on the infrastructure, but of course we need to think about the skills and the talents, because that's a big risk which we are taking as a community or as an industry.
If you take Africa as a continent, Samir, give us an idea of how much we export, how much we import rather, the supply-demand balance across all the energy sources, but notably oil and gas.
Yeah, as I just mentioned before, because there is now an oversupply almost on the oil side, that means that OPEC has been going there and regulating the outputs in order to be able to keep a steady price. The thing is that what we are facing today, if you are in explorations, for instance, in the US, and you're going for tight oil or associated oil together with gas, you will be spending around $10 to $40 actually per barrel. But if you are in the oil sands activities as a mining itself or an upgrade, you will be spending about $100 per barrel. And as we see now, the supply is increasing and the demand is decreasing. That's where we see the supply and demand is taking different shape than what it used to be in the past. And therefore, we believe that there will be quite a good pressure on the oil price. But what we see, however,
There's
also,
obviously...
Sorry.
No, carry on.
What we see, however, is that the gas is going to be, in the next couple of decades, that's going to be the fuel which everybody is looking for. There is a vast abundant reserves of gas in the different places in the world. With the technology which we have today, whether it is with horizontal drilling, whether it is actually through fracking process, we will be able to extract much more gas than what we have been having in the past. And the US today is representing the biggest opportunity. Now, if you go and you see the prices in the US, we are speaking about $3.5 per million BTU, while on Tokyo Bay you will be paying maybe $17, $18. So there is an enormous arbitrage between the US prices and Tokyo prices, and that's going to be harmonized in the near future. So as gas is going to be more and more used, whether it is in power generation or used in an industrial application, that would represent with it quite a good opportunity for the industry to grow.